Hey everyone, welcome back to Corporate Decoder. We're here to analyze a proxy statement from EnerSys, a leader in stored energy solutions. And trust me, this isn't just another dry financial document. There's a change in leadership and talk of expanding into new markets as well as old markets. This document outlines some important moves, including the election of directors, executive pay, and a changing business strategy. It sounds boring, but we will decode it piece by piece to see EnerSys' true direction. It's a mix of growth opportunities and pretty big risks. Before we dive in, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for more discussion. EnerSys appears positive, talking about expanding their share in the defense market, optimizing their whole organization, reducing those costs, and investing in faster production. They highlight the acquisition of Bren-Tronics, a leader in portable power for the military. To see some highlights, let's check out their financial snapshot where EnerSys is boasting about growing cash flow and profitability. Looking at selected results for fiscal 2025, their sales grew a bit, but operating earnings jumped over 30% to $464.7 million, according to the table. Even better, their adjusted operating earnings increased a notable 17.3%. Their diluted earnings per share, aka EPS, that profit per share everyone cares about, is reported as being up over 38%, but diving into the fine print, you can see that this includes the benefits from something called IRC 45X. So the earnings were helped by tax credits. While it's great they took advantage of government incentives, understand how it works. It's also important to know that EnerSys returned a lot of cash to stockholders through dividends and stock buybacks to the tune of $192 million. However, their cash flow has decreased and they claim that their net leverage has increased. I definitely recommend keeping an eye on that because higher leverage in a high interest environment can be very problematic. Now let's see some of the key strategic wins. Also, there is a leadership change that will be important later. EnerSys says that they acquired Bren-Tronics, which really helped grow their lithium strategy and gave them portable lithium power solutions for soldiers in the field, and also helped expand the company's military and defense capabilities. There are some data-safe TPPL batteries with embedded technology for data centers, and even ABSL lithium batteries on board a NASA spacecraft. Also, they have a new heavy-duty 48-volt lithium battery for forklifts. Interestingly, Time magazine and Forbes thought EnerSys was among the world's best companies and best employers in the world. Even better, they got the 2024 Energy Storage Product of the Year award from Electrical Review and Data Center Review. All of this is very positive for their image. There is a change happening at the company. After 9 years, Dave Schaefer has stepped down as CEO, and they are excited about Sean O'Connell to take the company further. The company states that the board is confident that Sean's leadership will build on the strong foundation of EnerSys. EnerSys finishes their letter by saying they are excited about their ability to provide reliable, strong service to customers, strengthen infrastructure, and enhance energy security. It's important to note, like every public company report, the last section contains a list of what are called forward-looking statements that involve a great deal of risk and uncertainty. Let's move on to a notice of the annual meeting of stockholders and what they will be discussing. So on July 31st, there will be an annual meeting held virtually where they want your vote. What's interesting is that the board wants to stream the meeting and give everyone around the world a chance to jump in. That is more engaging than most companies do. What is important for your vote? There will be a vote to elect new Class 3 directors, the approval of their independent accountant firm, and on executive pay. Now let's analyze how the directors are structured, their pay, and what their role is in the company. We can see the ages and positions of the different members of the board. For example, Stephen Fludder is highly qualified with experience in electric grid and smart energy storage. Dave Haberger brings financial, strategic planning, and technology expertise. Lauren Nossenberger appears to be an expert in cybersecurity and technology, which may signal digital plans for the business. Overall, the board seems very complementary to the business and signals a move into more technology-heavy areas. The board determined that all directors on the board, excluding Sean O'Connell, are independent under the listing standards of the New York Stock Exchange. This is standard since almost always the CEO role is not independent but is just there. There are several committees such as the Audit Committee involved in cybersecurity, the Compensation, and even a whole Technology Advisory Committee. It looks like the Technology Advisory Committee and the board is carefully overseeing things such as strategic execution as well as diversity and inclusion. It's important to mention that everything in this report contains those forward-looking statements and that there could be many outcomes in the company. The board gets paid, but how much? For fiscal year 2025, each non-employee director received an award of over $155,000. Not too shabby if you ask me. Importantly, the company has created robust stock ownership guidelines where they want people to own almost 5x their annual board cash retainer, so their goals are aligned for real. Here's a quick snapshot of the cash and stock payments. For example, Paul Tufano, director, made $170K in cash and $260K in stock. These payments aren't overly high and seem aligned with the board size and duties. It also is worth mentioning that they require the board to hold stock within 5 years in to prevent conflicts of interest. Next, let's look at who gets the final say in accounting. They are required to have stockholders ratify the auditing firm in a vote. The auditing firm listed got over $5 million in fees for their services, but they also get some consultation work, so they get paid plenty. The audit committee is filled with independent directors, not staff. You can also see their responsibility in making sure that the report is accurate. What about other internal individuals at the company? We can see the bios of the different executive officers, the people in this video. You can see that Chad Uplinger is the head of the Motive Power and graduated with a degree in marketing. Seems like the company values promoting from within. What about the leadership's executive compensation? The executives get bonuses under a plan. It looks to be about 130% of target after results. The committee tries to reward the executives and have them aligned with the decisions of the board of directors and shareholders. The plan focuses a lot on earnings and also those 5-year transformation goals. And here we see most of the pay appears to be at risk. This means they only pay out if the executive does well and meets long-term goals of value. About almost 90% of executive pay at the CEO level is at risk. What do the stockholders say? Say on pay votes are overwhelmingly approved, which means most people do approve of current compensation standards. Good thing to note since there are many instances where there is backlash and rejection of executive compensation. We don't permit hedging or pledging of our stock, meaning people should not be betting against the company or leveraging it for loans. Again, something very positive. So the board gets 150K less a ton of stock. Seems like a fair deal to sit on that board. Ronald Vargo is the audit chair and has been in the business a long time. Has a good history of understanding and working with the company. You can request a copy of the annual meeting by calling them or emailing them at the locations that are provided, which is standard for these types of proxy reports. Okay, that's interesting. The CEO pay ratio is 158-1. That means that the workers are paid about $53,000 while the leader gets over $8 million. However, CEO pay is all at risk. Lastly, as you would expect, you get a ton of these financial certifications up TAV. Now, my views. After going through all this, EnerSys appears to be in a pretty interesting position. I like how the board has changed and seems keen on getting into technology. There are pretty big shifts that are being made in the corporate areas and how executives get paid. Finally, there is an honest attempt for the company to promote better values and metrics. Risks do exist, competition is fierce, and supply chain problems remain. There's also a change in management which could be a wild card. Overall, EnerSys is worth a look. They're adapting to new markets and are trying to be attractive for investors. Just continue to follow the future steps that the firm takes. Alright, that's our breakdown of EnerSys' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.